our latest thinking is that by the year 2026, the average electric vehicle will cost about $15,000. Well, one of the reasons we do believe there's going to be quite a bit of commoditization, because by that time, we believe that autonomous vehicles will be taking off.
So you've got a $3,000 price target on Tesla for the year 2025. And I know that the build out of autonomous vehicles is one of the things underlying that estimate. What else is behind it?
Well, a few key variables. One, what market share of the electric vehicle market do we believe Tesla will achieve? It's in the low 20s worldwide right now. In the US, it's in the 60% share. What we are beginning to believe, especially if Tesla is the first to be successful in autonomous in the United States, we're beginning to believe that not only will Tesla take that big a share of the electric vehicle market, we believe that it could take 20 to 25% share of the total auto market in 5 years. Now that's by 2026.
In the meantime, Elon Musk has been selling shares of Tesla. How concerned are you about that?
I'm not concerned, because what he's doing is he wants to exercise his options, and there will be some tax consequences associated with his managing his wealth. So he's doing this to pay those tax bills, and he's making a very strong point of it. I think he's going to pay $20 billion when all is said and done this year. On the sell side, typically, we are what is called a liquidity provider. We are usually selling when, let's say, for whatever reason, one of our stocks, even our high conviction stocks, has gone up, say, 20, 30, 40% relative to the rest of the stocks in our portfolio. It's just called portfolio management. If one stock has done that well relative to the others in the portfolio, take some profits and deploy them into stocks that have been neglected or punished for some reason. So a liquidity provider sells when others are really excited about buying, and buys when whether speculators or hedge funds or other investors are just negative on a stock. Tesla is on the battery front about 3 to 4 years ahead of both Lucid and Rivian and almost anyone else. And that's because, well, they've become very creative in the battery space, introducing silicon into anodes and experimenting with ultra capacitors. So we think they're ahead of the game by 3 or 4 years. And as I mentioned before, in artificial intelligence, and this is where transportation is going. If we're going autonomous, neither Rivian, and we've interviewed both of them, we've had meetings with their management teams, neither is interested, at least at this time, in pursuing autonomous. We think, therefore, that's a very narrow way of viewing transportation, and they will have niches. And given the Amazon Rivian tie-up, it is possible, if these vehicles become Amazon delivery vehicles, that they will be able to collect enough data over time to become a part of Amazon's logistics network. But we doubt that they will become knowledgeable enough from a data point of view to be a fully autonomous taxi network around the country. We believe that Tesla's decision to design its own artificial intelligence chip was the real breakthrough here. Now, they designed it and the specs were out in 2018. Since then, they have been collecting billions and billions of miles of data. Actually, I shouldn't say their robots, like my Model 3, have been collecting data for them for these last few years. And what we're really interested in are the corner cases. Now, the pilot test for full self-driving, Tesla's pilot test, has just started, and it includes the safest Tesla drivers out there. So they had to get a 98 or to 100 on a score. And what we've learned so far from them is that when it works, it's a dream. It's unbelievable. When it doesn't work, it's terrifying, a near-death experience. And so these very safe drivers are guiding Tesla. So every time there is a miss, whatever that miss is, and very often the miss will simply be stopping because of uncertainty. They hit a button, and that video goes back to Tesla so they can learn from their mistakes. So we've got passionate users of Tesla's vehicles out there helping them with this autonomous effort. And we do believe that they will perfect it over time, and that within a year, more of us will have had an experience in an autonomous vehicle.
The market cap of EV companies actually surpassed that of traditional automakers. To some people, this looks like rank speculation, given the EV industry's minimal production and minimal revenue relative to the Fords and GMs of the world. Are the bulls right in your view? How do you explain this?
Yes, we do think the bulls are right. And we've been banging this drum since we started the company in 2014. It is now the total cost of ownership of an electric vehicle is less expensive than that of a gas-powered vehicle. And soon, we think within 1 to 2 years, and maybe even sooner with subsidies, the actual sticker price of like-for-like vehicles, electric and gas, we think electric vehicle prices will drop below gas-powered vehicle prices and continue to drop. Our latest thinking is that by the year 2026, the average electric vehicle will cost about $15,000. Well, one of the reasons we do believe there's going to be quite a bit of commoditization, because by that time, we believe that autonomous vehicles will be taking off, and autonomous vehicles will be run in networks, autonomous taxi networks, so fleets. And so design is less important than the ability of these cars to get people from point A to point B.